right, hang on.
Access to this webinar is for educational and informational purposes only. Consult a licensed broker or registered investment advisor before placing any trades. All securities and orders discussed are tracked and monitored in virtual trading accounts. Virtual account prices and returns may differ from actual trading results. Commission costs are excluded. Neither philstockwell.com PSW, nor its affiliates, nor any of their respective officers, personnel, representatives, agents, or independent contractors are in such capacities licensed financial advisors, registered investment advisors, or registered broker-dealers. Nothing contained in this webinar, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Trading options involve risk. Visit the OCC website www.optionsclearing.com to read characteristics and risks of standardized options. PSW provides education and training services that are meant to teach you the risks and potential rewards of trading options, and we are not a service that tells you what to trade. We are not implying or guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. Past performance does not equal future results, and results discussed in this webinar are not typical and are only valid on that specific or identified date. Your results may vary. By accessing this webinar, you agree to hold the above harmless from any loss you may incur as a result of information discussed in the media identified above. By accessing this webinar, you agree to be placed on our mailing list and receive our newsletter. Rest assured, we take your privacy very seriously, and we will not distribute or sell your information to anyone.
All right. So let's see what happened in oil. We forgot about the oil inventory today. So it's such a crazy day we didn't get to it. La-ti-da. Is today up to May 1st? No, this isn't today. Wait, what's going on here? Uh-oh. This is not the new report. It is Wednesday. Yeah, of course it's Wednesday. That's why we're here. Uh-oh. Let me find the news and see if we see anything there. Where's news? Oh, isn't that weird? Today's market? Is that what they call the news? No. Am I crazy? I don't see news. See the latest news. Oh, that's really, I always have it permanently up on my machine. I never think to look at it. All right, so we go here, and let me just go down 1030 because obviously it's important news. There it is. Wow, that's pretty good. So the net was basically neutral. It was a small drawer in oil of all things. And look at the consensus. There was a consensus for a 4 million barrel build. And then these two guys canceled each other out, gasoline and distillate. So basically kind of flat, which is a gigantic improvement. I don't think oil actually took it that well. It's weird, isn't it, right? You would think that would have, it did spike up at first, but now it's back down. I'm not sure I don't know what they could have wanted out of that. But I imagine that the reason is because when you actually look at the details in the EIA report, which is not out yet, for whatever reason, it's supposed to be out at 1 o'clock. May 8th, there you go. Okay, so if you look at the details, I'm sure there's a tremendous cutback in production, so we'll see. Let's see if I can make it a little bigger for you guys. I'm pretty sure it's a little hard to read. Okay, so what do we have here? We have for the, now, look how far off. Now, see, here's the thing. They just started cutting back production tremendously. So what you see is compared to last year, you can't compare it to last week, but compared to last year, 4 million less barrels a day are being sent to the refineries. That's out of 16 million. That's 25% less oil is being processed. So that's where you're going with this thing. That makes a huge difference. Mostly it's reflected in the gasoline. Notice gasoline production is off tremendously, off by like 3 million barrels. So it's off by about 30%. As to the oil overall, very little build, right? But last year we had 1910 last year. This is 2034. So that's 100 and something million more barrel oil. 100 would be 2010. Yeah, it's 120 million barrels more in storage than we had last year, which is 5% more. It's not horrendous. They act like it's a total catastrophe, but the thing is, we've been at near peak storage for years. and this just really put us over the top. Export wise, that's interesting. We didn't export that much this week. That went way down. We were exporting 1.6 million, 1.4 million a day. Now we've exported less than 1 million barrels. Well, I guess because we're not making it. But I imagine the demand for exported oil and exported petroleum went down as well. And you would think all that would cause the price to drop, but not really. In fact, gasoline's up 178 to 185. Oil's way up. Oil was 19, now it's 25. There's no rationale to this. It's just I mean, it's kind of like when you get into subatomic particles and they become irrational, like you know, like a normal, like you know, like you need to understand quantum mechanics just to just to know what they're doing. Physicists can explain to you all day long how it works, but it's all gobbledygook, you know, because it's like, oh, they have charm particles and strange particles and this and that. Because when you get below a certain realm in physics, the laws of physics are no longer what you expect them to be. So same thing goes for monetary laws of physics. When you get below a certain price point of oil, when you're at a price point where there's no supply and demand thing. In other words, supply is controlled. Demand is effectively, you know, is far below the supply. So it's only a supply-driven model here. And even that supply, and then the demand is only driven by expectations and future gambling and so on and so forth. And the price is so low that any little speculation can affect it wildly. You're no longer dealing with like any kind of normal situation. That's why we stopped betting it, because it's silly. It's like you can't make a bet on which way oil is going to go, because nothing that matters, nothing that we're trained to observe and respond to matters right now, because what matters is what the Saudi prince says. What matters is what this one says. But how can I say it? Okay, so it's like you know, if you're in a boat and you have oars, you have that level of control that you can row in a certain direction. But then there's the wind and the tide and the leak in the boat and then 5 other people have oars and they could be going in different directions. Then your rowing doesn't matter very much, right? And even if you watch the rowers, then there's still the tide and the current and the wind and so on and so forth. There's too many factors going in too many directions that are pulled by too many people that we don't understand. Ordinarily, it's like a sailboat. Ordinarily, there's only a couple of factors where you say, okay, you've got the wind, you got OPEC and what they do, you've got the potential for war here and there, and you've got supply disruption, and you've got demand. And within that, sure, some Saudi prince could say something, or Trump could say something, or whatever, but it doesn't really affect the bigger picture. But in this case, the bigger picture doesn't exist, and it's only the little picture, it's only the details. So now you do have to worry about every little rower, and they could go in different directions, and they are going in different directions. And now you're being asked to predict which way the boat goes, and it's folly, especially when the rowers randomly change their direction. It's just silly to try to predict it. It makes no sense. So you don't. I mean, and this goes to the stock market and a lot of other things too. It's you know, like I said last week when we were 1.2 million, I said honestly, just we're up 100% for the year in the short-term and long-term portfolio. You shouldn't be up 100% in a bad market. You may as well cash out. You're not going to do much better. So here we are today. We're only up 100 and we're at 1.1 million instead of 1.2 million. We're down about $100,000, and or down about $50,000 at the moment. But so at what point do we pull the plug? Well, we're certainly going to pull the plug if we can't hold 1 million. We believe we are adequately hedged. All right, but that's hard to tell when the VIX is going higher. There it is. So when you look short term, the VIX is flying up. That's 26 to 34. That's 9 points basically on the VIX from 26. 9 is 1/3 of 27, right? So therefore it's a 30%, 33%, whatever increase in the VIX in 2 days. coinciding with a drop from 29.40 to 28. So 140 out of 29 is about a 5% drop. So we've got a 5% drop and a 30% pop in the VIX. Of course, that's going to whack out our portfolios. The market's not equipped to deal with this. The stock indexes and especially option prices are not equipped to deal with this kind of volatility. On short term, you're going to get wacky prices. So that means your portfolio balances get completely thrown off. So the long-term portfolio, which peaked out at 30%, oh, good, that's actually good because now I can remember what the number was. It was as high as 30%. And so right now it's at 573. So it was at 650 at the top. It's now 573. So we dropped 75,000 on the long-term portfolio. The short-term portfolio, we just adjusted yesterday to be a little more aggressive, is now 471%, so 571. Oh yeah, so like I said, so what we said that was 575, so now it's 575 plus 570 is 1145. So we're down about 50,000 bucks from last week in the combined portfolio. What the short-term portfolio do? It mitigated half the damages. That's what we want it to do. If you're going to be bullish, if our outlook is bullish, then we should be 2/3 bullish, 1/3 bearish. And that means that if you lose your 2/3, then you gain your 1/3, you only lose 1/3, right? That's the way it should work. If your 2/3 double up and you lose your other 1/3, you gain whatever the math is. It's 66 and 30. You gain 50% or whatever instead. You don't gain 2/3, you gain 60%. I mean, sorry, you gain 50%. That's fine. So we expected it to take, if we take it, we expected a 5 to 10% drop on a pullback. I didn't think we'd get it in 2 days from when I called it. I called it yesterday in the morning. So, I mean, it's, I could only see it coming. I couldn't see exactly when it was coming, but it was just, I did the math yesterday. And let's talk about that. That's important because I know a lot of people get caught off guard by stuff like this. And we should talk about how we think about these things. If we got any questions. Nobody has any questions, so I'll just keep battling on. That's fine. Fine, dandy. All right, so we weren't at 3,000, we were getting close. So I said 3,000 because we were plowing over 29 and things were looking good and we were coming up here. And well, where's the shorter term chart? Futures, S&P, 5 minutes. Oh, that's too far back. Hourly. All right. So, oh, I see. That's 6 p.m. or whenever the futures open. So the futures opened back up at 6. We were rocketing higher. We were 29.40, and if we had kept going, then 3,000's up here. Didn't happen, of course. But you don't wait to hedge. Okay, so thing number one, let's it's hard. It's great to teach in a crisis because your examples are right there. It's like, this happened here and we caught it, and this happened here and we caught it, but how did we catch it? Because you have to know when you made too much money. We clearly made too much money. Things were getting overvalued. All right, and you think of why are they overvalued? Well, because Trump is telling everybody that the virus is under control and we can reopen America and everyone can go back to work and he saved the country and blah, blah, blah. And look, I get criticized for being political. All right, but if it was Obama saying it, although obviously I don't believe he would, but if it was Obama saying it and I was blindly obeying Obama and I said, I think the president says we're fine and we're fine, blah, 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 you would want me to say that too, because then you'd know how I'm thinking. And if I think Trump's a moron and he's lying to us, I'm going to tell you that. And you can say, I believe you, Phil, or you can say, well, Phil's being clouded by his hatred of Trump or whatever, or his love of Obama or whatever it is. You know, and I'll tell you that I don't hate, well, I don't blindly, I don't think I do hate Donald Trump at this point. I was going to say I don't hate Donald Trump, but I'm thinking about that being like, I kind of do. Okay, well, yeah, no, I'd have to say, yeah, I think I probably do. Considering it was just, I was just imagining like what we would have to do if he refuses to hold an election. I'm wondering how extreme people should react to that. But we're not going to talk about that. That's just crap. But anyway, I like good leaders. I don't like bad leaders. I liked Obama. I didn't like Trump. I didn't like Bush. I liked Clinton. If that makes me a Democrat, then I'm a Democrat. And I am a Democrat. I'm a liberal socialist. I think that the government has a duty to provide effectively life, liberty, and pursuit of happiness to its people. I believe people deserve an education. I believe they deserve food. I believe they deserve shelter. I think a lot of society is a lottery. A lot of life is a birth lottery. And you can't help that. And it's nobody's fault that you're born rich or born poor. And it's nobody's fault you're born smarter than somebody else. But we don't teach people who are smarter that they have an obligation to take care of the people who aren't. We don't teach people who are more capable to take care of the people who aren't. And that's where it goes wrong. You shouldn't, it's weird to have the debate about should we help these people? Do they deserve food? Do they deserve medical care? When they're human fucking beings. How are we even having that discussion? Is it too expensive? No, it's not too expensive if it's your priority. Okay, my wife, my kids, my mother, my brothers, my nephews, my nieces all have whatever they need as far as medical care and whatever, because I can provide it. It's an absolute duty, and in my mind, that duty extends to all people that I can possibly help. But then, you know, if you teach that to everybody and everybody takes that social responsibility, then it's easy to help everybody. And basically, I would just have to say, personally, I just have to decide I'm not going to live a certain lifestyle because I'd rather put the money towards helping other people. And you could easily do that, but you have to teach people that the race to live better, the race to gold plate your toilet bowls and things is not winning in the as a human being. That's not what it's about. So if that makes me a freaking liberal and a Democrat and whatever, then yeah, I guess it does. But that's just my attitude. I think the world would be a better place if everybody helped everybody else. And I'm not saying that you can't have more than other people. I'm not saying you can't be successful. But there's a limit. I'm for 90% taxation on people who earn over $1 billion a year. Now, if it's a one-time thing, 10 billion. So in other words, let's say one time you sell your company for $10 billion or $100 billion, you should not be overtaxed on that. That's a one-time thing. You built something and you did it. All right, so you can sell a company that you built from scratch and make money, and there's your ability to make many billions of dollars. But you know, so does Bill Gates deserve $100 billion for selling Microsoft? Sure, that's fair, because it's $1 trillion company now. And Bezos built his company and kept the money in the company. But for any one person in a year to make $1 billion when 1 million other people can't get $1,000 worth of food, that's crazy. That's just not right. So, at a certain point, taxes should be prohibitive. And it's not, and then they talk about the disincentive to work. First of all, you're only talking about 1,000 people on the planet Earth who make that kind of money. But the money they make is more money than the bottom half of the people on the planet make. But if you draw a line and you distribute that money back to the people in the bottom half, you double those people's net worth. You double their food, you double their shelter, you double their clothing. You're giving them 100% more of everything, while the rich people, you're cutting them off at $1 billion a year in salary. Am I a communist? Is that wrong? Is that a crazy attitude? That's how I look at things. Corporations too, same thing, prohibitively taxed. See, the thing about corporations is that people leave the money in the companies, and then the company buys back stock and whatever other bullshit. If you tax the money as profit, you force the corporation to do something with the money. They don't have to pay the tax. They could spend it on more salaries for people, and those people will pay the tax, but at least the money goes out and flows back into the country. Doesn't pool up in frickin' in Ireland or something like that in some tax-free bullshit structures and things. So again, there's values to taxation, but it has to be also globally enforced. You can't have tax havens and things like that. Anyhow, not the main point, but the point is, so I'm a Democrat because it just so happens that the Democratic people that come along to me seem like good leaders. I liked Reagan at first, but then he went off the rails. I wasn't a Republican, but I liked Reagan more than who was it? Dukakis in the first one or something like that. It was Carter, and then he was never going to get reelected. I don't know. Did Reagan beat Carter? Or did Carter not even run again? I don't even remember. I remember Dukakis, but then maybe Carter ran against Reagan, I think, the first time. Funny how I can't remember that. But anyway, so I had Nixon, obviously. I wasn't too thrilled with him. That was the first politically guy I was aware of, because he was 68 and I was 5. So, and then by the time I was 10 years old, he was impeached. So that was my first lesson in politics was Nixon. Nixon was followed by Ford. He was whatever he was. Ford was followed by Carter. Carter I thought was a decent guy and seemed to be trying, but couldn't get it together. Then Reagan came along. Reagan sounded very exciting. Sounded really exciting. His economics were questionable, but he was he was definitely gung ho America. Yeah. He was a feel good kind of guy. Just like Trump is, I guess, for people. And I wasn't so jaded at the time, so I guess I kind of liked him. Not the second term, but by the second term, it was obvious that he was corrupt, crooked, and his policies weren't working. So then it got me back to well, that's like Nixon, basically. He's just like Nixon, except it was an actor who played a better part of being the nice guy than Nixon did. So then after Reagan, Clinton. Am I missing one? No, Reagan Bush. Sorry, Reagan Bush. Oh, forget it. SNL crisis. I was just out of college then. So that was Bush, the SNL crisis, terrible mismanagement of the economy. Not a nice guy, was involved in the same shady shit that Reagan was involved in. I don't know how he got elected. Well, he got elected because the Democrats constantly run completely incompetent people. And they're doing it again, frankly. I'm not sure Biden's going to get elected. He's running this campaign from his basement. It's kind of crazy. And so then we got Bush, then Clinton. So now finally I got a president I can get behind. I could care less about the sex scandals. It's irrelevant to me, as it's been irrelevant to people in France forever, or most of Europe. I think, frankly, I don't think too many people in Europe are concerned about sex scandals. and otherwise fantastic president, did great stuff, economically great, everything great. Then we went from Clinton to Junior Bush, total freaking disaster, and I can't even imagine how somebody could argue that point. And then we got Obama, and also a huge success, very well run. America was doing fantastic, and now Trump. So that's why I'm a Democrat. That's my life experience with presidents. I mean, what am I going to do? I mean, should I choose the other side of that coin? I can't get there. So that clouds my judgment to some extent, but again, I would argue it doesn't. I just like good presidents. I don't like bad presidents. Show me a good Republican president. Show me a good Republican something. I don't just blanketly hate them. I give everyone a chance, but there's a lot of failure there when I give people a chance on the GOP side. And again, politics wise, so then that way, and then economically, I believe in the redistribution of wealth. Not 100%, but I'm a socialist. I'm not a capitalist. I think it's great to make money, but to a certain point, at a certain point, your wealth building becomes destructive. And anyway, so let's make some money here. So anyway, that being the point, so when I look at policies, that's what I was saying. So when I look at policies, I have to look at like what's happening. So when Donald Trump is promising a bunch of bullshit that's not true, and I write an article saying this is a bunch of bullshit that's not true, which is what I wrote about on Tuesday. All right, so I said the growth expectations would justify corporations no longer have to pay tax. I went back historically to what happened, okay? So I said, why did we go up in 2016? Because growth expectations would justify corporations don't have to pay any taxes. They don't have to worry about destroying the environment. Earnings shot up to $140 per share, which is a PE of 24. Now, 24 is a lot. It takes 24 years for the company to make back the money you're making. That's a return of 4%. And stocks are risky. So you're putting risky investment that you're getting 4% of your money back. That's what it means. The PE is 50, it takes them 50 years to make your money back. If the PE is 100, it takes them 100 years to make your money back. Now, you can hope the PE reduces over time. You can hope that they make that money back faster, but that's not very realistic, that the global economy is going to expand at such a rapid pace that the average company is going to do far better than it seems. No, it's very unlikely. And historically, even in great times, we don't have much more than 4% global growth. That's what you're looking at here. This is the S&P 500. This is a big basket of stocks. So 24.8 is too high. And I said that since September. We were lower, but back in September when we cashed out our portfolios, I said, this is too high. I can't do this. I can't buy things at these prices. Not every stock is at that price, of course. We found some good ones, but as a whole, when the market is at overpriced, I can't pay it. All right. So then the virus, and the virus is devastating. It's a huge impact on the economy. But what are we doing? We just threw $6 trillion at the problem. You know, if your house is on fire and they throw 6 houses worth of water in the direction of your house, hopefully some of it will hit your house and put the fire out. It's kind of hard, you know, if you unless you're really aiming wrong, you're probably going to get the fire out with an overabundance of water. You're not doing exactly what's necessary. It's not a surgical strike, and you could argue, and obviously you do argue in a fire because you know they do use a lot of water. But you could argue that you don't have time to say, you know, as a fireman would say, I don't have time to sit here and figure out where I should apply the water to do the least damage to the house and put out the fire the fastest. There, you know, if you analyze it, you would probably find 3 or 4 spots where if you hit those spots, the rest will probably die out on its own and you wouldn't damage the structure as much as completely soaking the place down like they did. But that's, you know, really, you don't have time to make the assessment. In this case, we did not have time to make the assessment. We were shutting with no notice basically at all, although there would have been notice had we not been in denial for a month, but with no notice at all, we shut down the economy. Literally like 2 days notice. I remember eating at the restaurant on the corner on, I don't remember what day it was, but I remember specifically getting up and going out to eat dinner. And I said to my friend who I ate dinner with, I said I wanted to go out because this might be our last meal out for a while. And he thought I was kidding. And it turned out the next day they notified, they put the notice out to not go out anymore, and they shut the restaurants. I saw that coming. He doesn't pay as much attention to the markets and politics as I do, so he didn't know it was coming. But he didn't realize it was that serious. And neither did the restaurant. They had no idea. Nobody, it just suddenly happened. So when the government shuts down the country, and the government puts millions and millions of people out of work, and the government makes rules that say you can't do this, and then the consequences of those actions are rents don't get paid, salaries don't get paid, so on and so forth, and the cascading failures of all that happening, the government needs to do something, obviously. Now, what should they do? Something better than what they did. They basically made a giant mess. Why did they make a giant mess? They made a giant mess so Trump could steal the money. You can't steal the money if you carefully lay out a plan and target everything. If you just throw tons of money at something, the ability for graft and corruption within the system and throwing favors and so on and so forth is almost infinite. There's just so many ways you can screw people, you can take money. $6 trillion. Most people in the world, with 6,000 chances for someone to steal $1 billion. Put it that way. And then already in the bill is a $500 billion slush fund that Trump controls with basically no oversight. And again, this isn't because I hate Trump, it's because it's what he's doing. He doesn't need me to hate him to do this, apparently. And if he does it and I point it out, that doesn't make it, I don't know. I don't understand the accusation that I hate Trump just because I mentioned the fact that he's stealing money. He's stealing money. It's obvious. Everybody can see it. Anyway, so where was it? All right. So anyway, so $6 trillion, ridiculous amount of money. Therefore, at the bottom, when they announced that they were putting this kind of money to work in March 23rd, we decided to get bullish. Fine. So we bought a whole bunch of stock and said, this is going to be great. Now, as it turned out, though, since March 23rd, only 6 weeks ago, we've seen that the money has been very poorly applied, very badly managed, very much not, and as expected, a lot of it's even missing. Can't figure out where that, where did $6 trillion, where did this money go already? It's gone. Now we need 3 trillion more. Democrats are trying to get 3 trillion more. But the Republicans don't want it because what's the Democrats 3 trillion for? It's to give everybody $2,000 a month for the lockdown. Not $1,200 total for the lockdown, $2,000 a month, $6,000. Basically, they're putting aside $2,000 a month for 3 months because they anticipate that this reopening is not going to work. And they anticipate that we have to make a provision to fix the problem. And the best way to fix the problem is to maintain salaries. Because if you maintain salaries, that's what drives everything else. And I said that right at the beginning of the crisis. I said $6 trillion is the entire US payroll for the year. That $6 trillion is then multiplied 3.5 times. It moves through the economy 3.5 times and creates our GDP. That's called the money multiplier. So in other words, you give me $1 as a salary, and I go and take my $1 and I go buy the iced tea I'm holding in my hand. I always have an iced tea. I always have a green tea in my hand. So I have the green tea, and that $1 goes to the guy who has the store down the street. That guy at the store down the street gives it to the green tea distributor. The green tea distributor gives it to the driver for the green tea truck, and he gives the money to the gas station that provides the green tea guy with grass, and he eventually ends up in Japan going back to the green tea farmers. That's a multiplier. That dollar gets spent over and over and over in the economy on the way back to where the tea came from. That's how everything works. That dollar creates many more dollars. It's spent over and over again for the same goods and services. The same green tea. Somebody picked the leaf and somebody took the leaf and put the water in with the leaf and brewed it and then put it in a bottle and then shipped it, and then it went to the store and the store put it in the refrigerator and da da da. And there's a landlord somewhere and all kinds of things happen. That's how the GDP becomes a G. That's how we get a gross national product. All those transactions get counted along the way. So that all starts though by having consumers have money in their pockets in order to consume things and pay the rent and pay their bills and so on and so forth. Now, we skip that part. For whatever reason, 4 trillion from the Fed. So it was really 2.7 trillion plus. Then the Fed was bringing it up to over 6 trillion because of what they are able to do. They haven't actually pulled the trigger on everything yet, but they're still spending awesome amounts of money already, like $1 trillion plus already has been spent. So the hard money, $2.7 trillion. Only $1,200 went out to 200 million people. So $400 billion, let's say, was given in actual money to the people. But the rest just went to businesses and so on and so forth. But you don't need to give the businesses money if the consumers still are able to spend. So why didn't you just give it to the frickin' people? Why out of $2.7 trillion does only 20%, not even 20%, 15% of it go to the workers who you told not to work? You put them out of business. You stopped their jobs. Those are the guys you have to make whole. So anyway, so given that that's going on and we gather the facts as things change, my premise was originally, oh yeah, this is going to be great. We're going to get through this, no problem. Now, the virus turned out to be a little worse than we thought. The lockdown isn't really stopping the spread of the virus like we thought, partially because Americans are terrible at obeying these kind of things. You know, and also partially because we did it too late, and especially because we don't have protective equipment and we don't have testing. That's what other countries do to stop the virus from spreading. And by the way, this administration has and I'm sorry, it's a Republican one. This administration has redefined testing to mean an actual test. But that's not what testing is in other countries. In other countries, testing means checking everyone's temperature before they enter a store. Do you show signs of having a flu? Are you sick? Is your body fighting off an infection? That's what a temperature is. Your body is raising the temperature internally to help to create an unhealthy environment for the infection, for the virus, for the whatever it is, for the bacteria that you have inside you. You know, most of these things live in a very, very narrow temperature band. That's why they need hosts. They have to go inside a human body. They evolved to live in a human body or an animal body at a certain temperature. So if you're the animal, the trick is to vary your temperature. That's why lizards don't get viruses. They don't really work on lizards because they're too cold. So, so your body runs the temperature up, heats itself up in order, it can't cool itself down. There's no Freon. there's no natural Freon snacks. So your body only has really the choice of raising its temperature. So your body will attempt by running a fever to get rid of a virus. So having a fever is a very, very good sign that you may have an infection. Therefore, it is a 2-second thing to have a person at the door, instead of the Walmart greeter saying, how are you doing? He just takes a little temperature thing, goes click, okay, come on in, have a good day. Now, it's not perfect, but it's better than nothing. Making sure everybody has masks, better than nothing. But you know what also the problem is? This make your own mask bullshit is insane. In China, the government goes door to door giving you masks and saying, here you go, these are the masks that actually work and you're going to wear them. They'll say, go find some masks, good luck. This is madness. And also, we're not sanitizing. You know, you see pictures in foreign countries, or I could, street, I think we have shown you this before, street sanitizer. Yeah. Wait. Boy. Sanitize. Sanitize. There you go, street sanitizing COVID. This. That. Okay, this. We don't do this. Has anybody, tell me if you have, has anybody seen this in your town? This is what they do in Asia. This is how you fight a virus. The government gives people suits, gloves, masks, goggles, and it's not complicated. And basically it's soap water. It's not like some special super thing. But you spray everything down. You spray down all the surfaces and reduce the virus tremendously so that people can't get it. Or at least at the beginning of every day, the streets are clean. You go down, every store is cleaned. Not store owners make sure you wipe down this and that, blah, 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 blah. This is what you tell people to do. There are, yeah, disinfectant board. It's everywhere. Oh, here, look. There you go. Freaking robots spraying the streets. This is how you fight a virus. Trump says go to war against the virus. You're warriors against the virus. No, no, no. This is what warriors look like. Sending you off to battle where nobody's protecting you at all is not cool, and calling you a warrior doesn't make it a noble cause. It's basically just feeding you into a slaughterhouse. All around the world, this is what they do. Not in America. We are doing less than nothing to actually combat the virus. I mean, you know, of course, we're doing the research and this and that, but where is the real safety things? What are we actually doing? And why aren't we doing it? So anyway, and again, back to that. So as the time goes on between April whatever and now, I start losing my faith in what's happening. And I say, this is not, you know, $6 trillion is not going to be enough if we misappropriate the money. It's not going to be enough if we don't put it in the right people's hands. It's not going to be enough if we're not putting the money towards the freaking spraying and the PPE and the things that we actually need. Then it's not enough. And then my economic expectations get lowered. And we're not going to snap back, and we're going to be sick for longer, and it's going to take longer to recover. All these things become clear over the time, and we have to adjust our expectations accordingly. So I say with the S&P back near 3,000, we have to divide 3,000 by 24 to see if we're realistically optimistic for earnings. So in other words, to get back, it's one of those things where you move the A and B around for math. So now we're going to find it the other way. Now we're going to say, well, okay, so 24 is the maximum that we went before everything collapsed, 24 times earnings. So if we divide 3,000 where we are now by 24, then we find out what the earnings should be. It's 125. There's no freaking way that these companies are going to make 125. Not only are they not going to make it this year, they as I said here, we're more like 84 this year, and that's being fairly optimistic. Not 125, 84. 30-something% below 125. So are we going to trade at a 30+ times multiple, or is the market likely to contract? The market's likely to contract. I don't know. You know, it's not a quiz. The market's likely to contract. You can't pay 30 times earnings for the whole S&P. Not that it never happened. It did happen because after the fact, you don't realize it. I don't know if did I have that? Oh, that's a shame. I had a historical S&P chart. Wait. Nope. Anyway, okay. So then I come up with that and I say it's got to be 125, and then I say in order to be paying 3,000 for the S&P, we have to be this, and we have to believe that the global pandemic did not disrupt corporate earnings by more than 10%. That's ridiculous. You know that's ridiculous as soon as you read it. Therefore, we're too high. And this is Q1. Wait till Q2. Wait till you see those earnings. So I said to get to 140, we assume 3/4 of 30 and 1/4 of 50 Christmas, right? Figure a lot of companies make a lot of money in Christmas. So, and it's arbitrary, but I'm just saying it's 30, 30, 30, 50. Okay, fine. So that's 140. So this year, if you and I'm comparing how badly affected each quarter would be, I'd say at least 20% affected here would be 24 for Q1, which is what we're seeing with earnings. Next quarter, 0, and it could be negative actually. But let's say wiped out earnings, no earnings, and earnings can be wiped out next year, basically. Next quarter, we're gonna have the 0 earnings. Then how do we recover? Well, we get to 20. 20 is optimistic. 20 is 2/3 recovered by Q3. That's looking, considering Q3 starts on July 1st, that's pretty optimistic at the moment that we're gonna be 2/3 recovered nationally, 2/3 back to normal by July 1st, by July 1st. That's kind of optimistic. That's what I'm saying we're going to do, though. So I'm still being an optimist. I'm still being an optimist, and I'm still telling you the market's going to go back down. And then by Christmas, 80% recovered. And next year, no problem, fine. That's how we get to 84. 84 is way, way, way lower than the expected 125. Miles away. And we're not taking this into account, clearly. And I said, I'm not saying 84 is terrible. We were down to 1827 in 2008. 1827 in 2008. That's how far down earnings went. And we had been at 104. Now, it should be pointed out that the all-time high in 2007 or 2006 was 104. So at 104, the S&P was like at 1,800. No, it wasn't. It's like 1,500. So now the S&P is up 100% from 1,500, but earnings are only up 40%. So we're already paying a tremendously higher multiple than we ever paid before for stocks. We're already doing that. And now we're being asked to pay 50% more of a multiple than that? It's crazy. It's not supportable. And I don't care if stocks are the only thing to invest in or whatever. It's at a certain point, people are just like, I can't afford that. Nobody can afford that. So then I said we had massive bailouts, blah, blah, blah. And so there's a whole history thing. So if you want to read it, it's a whole history of how we get to this conclusion that the market was too high. I wrote out on Tuesday. And then the point was that the main reason we're being driven up is because, first of all, we assume the bailouts. I'm taking apart the reasons that we thought we'd go higher. We assumed the bailout would be plenty of money. Turns out that it's so mismanaged that it's not plenty of money. And that we assume that the president, or not we, but some of the people who can be fooled all of the time, are listening to the president. And clearly, we know that the president doesn't agree with scientists. The president doesn't agree with his own scientists, even his own scientists like Fauci and whatever. He doesn't agree with them either. And he's telling us that he has secret information and everything's going to be fine and this virus is on the run and we're going to get back to work and there won't be that much damage and it will be just a few people who are going to be sick and dead after this. And why would you believe it? And that's the point I'm making. It's not Trump bashing. It's a fact. Why would you believe it when you're listening to a man who lies 23.3 times per day? 23.3 times per day, one time every hour. So if he's asleep or not talking to people 12 hours a day, that means twice per hour he's lying. But that's not really the case, because these are only the lies that he's making publicly. So in the 2 hours that he is on camera on an average day, in that amount of time, and he's not addressing the people the whole time. Most of the time he's like swaying back and forth and doing that weird thing he does when he stands still, or he's sitting down grimacing or whatever he usually does. But in the times that he's speaking, in that short amount of time that he actually is speaking directly to people who are writing down what he says, when he's publicly appearing, not when he's sitting at his desk in the office with the staff, not at the times he's with the Joint Chiefs of Staff, God forbid, not at the times that he's sitting there with the Economic Council and whatever. No, those aren't even being counted. These are the times when he's sitting in front of a camera or with a reporter and he lies. That's 23 times in basically 2 hours of his day that he lies. It's basically he can't get a paragraph out without lying. 3-4 sentences tops before there's a lie. That's sick. That's a person that, forget not being president. I mean, he shouldn't be. He really should be locked up. I mean, that's just a seriously ill person. Unfortunately, he's the president of the United States. But the bottom line is, that wasn't the point that I was making. The point I was making was, it's an economic lie. This man is lying to us about the economy. We're investors. We need to care about that. We need to take that into account in our trading. I don't care how much you love Donald Trump. I don't care how much of a Republican you are. I don't care what you think you're supporting in this country by following what he says. Your job is to protect your family's wealth, your portfolio, to provide for people. Even if you hate the poor people, even if you don't give a crap about how many children are starving and dying and whatever, and you want it all for yourself, you still should be protecting it. And that means you got to protect it from him, because he's lying. It's not fine. It's not under control. We shouldn't be reopening the cities. And I hope I'm wrong and he's right. I really do. I hope he's not lying. But the chances are he's lying. So based on that information, we don't wait until we're sure it's a top to hedge. We say, okay, we're close enough to 3,000. I don't know if we're going to get there because of all the problems that I saw. Therefore, let's start putting on more hedges. And we didn't do a lot. We made a couple of moves in the short-term portfolio. We didn't do a lot here. Mostly we added an SDS spread that was better than the ones that we had. Oh, we had this June one that wasn't working, so we spent money and added another June spread. And we removed, that was the best thing though, is we removed the short calls from the SQQs. So it's that way, if there's a big pop in the NASDAQ, and guess what? There's a big pop in the NASDAQ. But a big drop in the NASDAQ. If there's a big drop in the NASDAQ, these 200 long calls are unencumbered. So I don't know what SQQQ is now, but it's obviously higher than 10. Yeah, 1155. So it went up like 15% in 2 days, or 10% in 2 days. So the point was that if we get this spike in SQQQ, we go back to 15, let's say, and I can get $5 or $6 for those calls, that's times 200. That's I don't know, some huge amount of money. Oh, they're $5 now. Sorry. So if we can get $10 and make another $100,000, then we would cash them out, or we would sell short calls or something like that. But now we have the freedom to do that. Oh, they were 5. I don't know what they are now. Let's see. SQQQ. Oop, trade. All products, right? SQQQ. 2022, what were they, the 10s? So now that, well, they still say 5 over here. Now they're like 6, but let's say they're about $6 now from going up. So like I said, though, that's why they're not reflecting the value at the moment. But they'll come into their own. That's fine. And you know, if we drop 5% and pop back, we don't need the hedge. It's not a big deal. This is if it's a disaster, though. At least it's here to protect us now. Oh, I'm sorry. That is the current price. Silly me. That I'm looking at the portfolio. 5 is the current price. At the time on Tuesday, it was 430. So not a big change. It went from 430 to 5. That's why I was confused. So it went from 430 to 5. We bought them for 6 at the time. We originally picked them up when they were 6, but we sold the short calls. And we sold the short calls for $5. We just bought them back for $1.40. So that's good. So we already made our money. So if we take 5 minus $1.40, that's 350, right? So then we subtract 350 from 6, and that means we're in these calls for net 250, and they're already at 5. So we're up, you know, we're up 100% on the long calls, wherever they went. Yeah, we're up 100% on these long calls net after we cashed out that. Now, what we're going to do next, though, is we're going to be loving now that our net is down to 250. If we can sell long calls, if we can sell short calls for 250, boom, it's a free hedge. Then we have a free hedge on the NASDAQ all the way up to 2022. So as an exercise, now we can look down to 2022. And we can say, what can we sell for 250? Well, we can sell anything for 250 because we got a nice pop in the NASDAQ now. So we can sell, we have the 10s, and we can sell the 35s again, because they pop back hard. They're 350. So we would then have $1 credit on a spread that's 200 times $25. So $500,000 spread. Now, of course, the chance of the NASDAQ going to 35 is very slim, though, so we probably wouldn't do that. What I would rather do is how much does it cost to roll the 10s to the 5s? And the 10s are 550, let's say, and the 5s are, they're not 570. Well, 5 and 9, so let's say 7. Let's say 750, just for argument's sake. So probably it'll cost $2 to roll down the 10s to the 5s. So I know it cost me $250, but if I sell something, so if I sell something for $450, like, who's 450? It's such weird numbers. These are nobody's trading these, so it's hard to say. Ooh, maybe sell something shorter term. Let's see what we can sell in January 2021. All right, I can sell the 30 calls in January 2021 for $230. That drops the net of the spread to free. So then I've got the 10-30 spread for free. Now, these of course can be rolled to much higher strikes in 2022. So that's good. But also, I think I would then spend the extra $2 to roll them down. And that's $40,000 because 200 long calls. Spend the extra $2 to roll down $5 because it's in the money $5. So for $2, we're buying $5. That's we're gaining $60,000. Spending $40,000, we're gaining $100,000 of coverage, and we're gaining $60,000 of intrinsic value for $40,000. So that's worth it. And then what we're doing is we're saying the NASDAQ, unless the NASDAQ goes down, we make money on the spread. Absolutely make money on the spread unless the NASDAQ goes lower. If the NASDAQ goes lower, long-term portfolio does well and we have our hedge. And I'm not saying to do this now. I'm just saying though, that's a move I'm very likely to make if the conditions don't change. Because for a long-term hedge, you want to say, unless the market goes up, I'm going to make money on my hedge. Because I'm going to sit there, I'm going to sit on the thing for 2 years. I want it to be worthless, but I want it to be worthless because I made a ton of money on my longs. See if we have any questions. Rick says, we had to wash hands at a station before going into the farmer's market in Minnesota, and they supervised us. That's good. There was not a temperature test or at our airports. No, not at the airport. Oh. My daughter's coming down to see me. She's driving. They decided to skip the airport so they can drive down. Where do you think the S&P will bottom or bounce around the new end? Okay, well, that's a hard one. Well, you know, as I'm saying, as we're going through, I can see where the top is, okay, because that's math. In my mind, that's just math. All right, so to me, it's like I can see when something gets too extreme, and then I can pick apart and I can show, I just show my work, right? This is me showing my homework. I'm showing you, it's like you can come back from high school. It's like I'm showing my work. I'm saying this is how I arrived at this conclusion that we should be spending money on hedges. Because, you know, because of this, because the money was misspent, Trump is lying about how healthy the economy is, and we're not taking these things into account, and the valuation of the S&P is ridiculously stretched. For those 3 reasons, I want to start hedging. That's exactly what I wrote on Tuesday. Went through every step of why we're doing this. Now, bottom, not the same thing. When we were at the bottom, on March 23rd, I wrote an article saying this is why we're too low. And a large part of that is because $6 trillion is a shitload of money. Okay, so my premise at the time was that $6 trillion was plenty of money. So I'm working the band. This is too low, and this is too high. And I've said that before. And we've got our S&P chart with the 5% rule in it. Whoops. No, that's not it. Boy, we do a lot of stuff in the daytime, don't we? That's not even today. Ha ha ha. Ha ha, fooled myself. Yes, I am losing my mind. But Seth Meyers said yesterday, I was like, oh, I can relate. Like, just so much time you can spend staying at home. All right, so today we were looking at the S&P chart. Let's see. Nope, not there. Oh, there it is. All right. So what are we doing? We're doing exactly what we thought we'd do. We are moving around the band of the S&P, and I believe that 3,000 is the upper limit, which makes really logically probably 2,700 is a lower limit, assuming things don't get much worse. But we should settle in. This should be our settling range. It's a 5% up and down around 2850, and we should be there for quite a while until we get a resolution on the virus, for good or bad. I mean, this is what we expected to happen when we were down here, and now we're here. So it's time to stop being too bullish. So a lot of the changes we're going to make to the portfolios this week, because it's expiration day on Friday, a lot of the changes we're going to make to the portfolios is we're going to be selling more premium to the suckers who think we're going to be higher. But we might sell some puts to people who think we're going to be lower, but I'm not as confident. We could go lower. I think it's more likely to break lower than we break higher. But of course, if we have a vaccine, if we have a good cure, now you don't need a vaccine. If they can fix you, if you get the virus and they have something, you take these pills and you feel better in 3 days, then that's a huge improvement. That would be very bullish, and we have to take that into account. If they have a vaccine and it's going to make it so hardly anybody's going to get it anymore, obviously huge improvement, right? So then the question would be, how fast can we ramp back up? Given that, it depends on the circumstances. On the downside, okay, here's the downside. And Pirate, I think, was asking about this earlier. She said, she was talking about, like, what if the virus mutates and it gets worse and blah, blah, blah. And I said, look, if, here, wait, let's see what Pirate said. Well, Potter said something, then Pirate said something, and here's Pirate. What did Potter say? Oh, Potter said, okay, let's say we have a vaccine that makes what's the market look like and what happens. And so we talked about that. I'm not going to get back into the whole thing, but I said, look, bottom line is, well, he said, once something is catastrophic as global shutdown is in the books, how can there be any other direction but up? Yeah, he's saying, how fast are we going to recover and what's the post thing? And I said, look, you can recover from anything, but the virus is like a neutron bomb. The virus kills the people, but leaves all the buildings standing. So that just means that when you clear away the bodies, once you clear away the bodies, you've got these nice, pretty factories that everybody can go back to work and sit down at the station and things, turn the machine back on, and you're all set to go. You can recover very, very quickly from something like that. And as to, does it leave a permanent scar on people? No, it doesn't. Okay, World War II, we blew up Hiroshima and Nagasaki. They're both major cities again. At some point, you don't, our human perspective is such that you don't think of things that going that way. But my mother, who was born in 1940, was in London during the Blitz when the Germans, she was a baby. She was less than 5. Obviously, the war ended when she was 5. But she remembers when she was a child, her house being bombed. Her house never got hit, but her neighbor's house got hit, and the house across the street got hit by bombs. And her whole early childhood was sirens and bombs. That's her whole memory of her first few years of life was sirens and bombs. And to this day, when she hears it, when a firecracker goes off or a fireworks or something like that, she cringes every time. That makes her cringe every time, because that's what she remembers from being a kid. It was always a bad sign. So people rebuild, people survive. Germany was destroyed in World War II. Millions of people were dead. They wrecked their economy. We rebelized Berlin, basically. They built a wall, they split the city, blah, blah, blah. Now it's a huge thriving economy. Okay, and as I mentioned here, I said, look, 1,000 years ago, the Black Death wiped out 1/3 of the human beings on the planet. Not 25% of the human beings on the planet were wiped out by the Black Death. 1 out of 4 people dead. We went into a spiraling depression that they called the Dark Ages, global depression called the Dark Ages, where we actually regressed as a society, lost a huge amount of literature and the great works and so on and so forth, and society basically rebuilt from there going forward. You know what? It's a page in your history books, right? Human society, now we're on the frickin' moon. So no matter how bad this gets, it's not wiping out humanity, it's not killing everybody, blah, blah, blah. It's a bad thing. But you can't, it's not going to change the world. People are still going to crawl up out of whatever the frick happens and get back up there and say, hey, how can I get some food? How am I going to make a buck? What am I going to do? What do people need? I'll get into that. It's my next business. I'm going to get into the business, whatever the hell people need now. Because that's what we do. That's what any animal does. It's not like we're special. It's what any animal does. You eat, you thrive, you survive, you figure out how to survive in the environment you're given. And if you measure it mathematically, it's an economy. Okay, as far as we know, ants don't have economists, but if you wanted to sit there and do the economics of an anthill, you could do the economics of an anthill. You have to decide what the unit of currency is. That's all. Whatever they value, you have to figure out what that is and how it's exchanged. And there it is. But that's an economy. You don't need people to have an economy. We just describe these abstract concepts to the basic animal behaviors that we have. So will we survive this? Of course we're going to survive this. Even if it wipes out 90% of the people on Earth, which is obviously not at all likely, but even if it wipes out 90% of the people on Earth and only some people who are immune end up surviving, they'll survive. They'll go on without us. And 1,000 years from now, they'll write a book saying, remember that time 90% of the people on Earth died? That sucked. Yeah. What are you going to do? But that's not where we're at. This is a virus. It's worse than usual, but it's not going to wipe out the human race. It's not even going to change the way we do things. Oh, and I did the math on that too, didn't I? Why did I do that? Because Empire was like getting depressed. Oh. Can I do the worst case math? Oh yeah, there it is. Okay, here. So, I said, look, I was in Thailand on Christmas, and I was worried enough about the virus then that I changed my flight. I was going to go to Hong Kong and hang out in Hong Kong for a couple of days to break up the trip, but then the virus was in Wuhan at the time, and I was thinking it was like SARS, so I was like, I don't want to get involved in some virus. Nobody knows what the hell is going on. So I flipped to Qatar and I went that way, went around the other side so I wouldn't hit the Chinese people commuting. And in Thailand, I wasn't worried about the virus. It hadn't spread there and there was no notice of it or anything. So I just did what I normally do. But by February, actually by January, but when Chinese New Year is coming, even though there are not that many cases in China, I still said this is terrible because this is all going to spread. You're putting all these people on trains and they're going to go all over to China. And then once that hits the train stations, you're going to hit the airports and everything else, and it's gone. That's exactly what happened. So, that's when I was first concerned. Was late January, I got concerned. By February, everybody was concerned except Trump. But by March, everybody was suddenly concerned, and we shut down by March 15th. About is when we shut down. But it's too late. It's way too late. But I said, and where is that virus curve? Oh, here it is. Yeah, see this? This is, the area of this is not different than the area of this. The same amount of people get infected. It's just a question of when. This is a virus with no vaccine. It's going to infect the same amount of people no matter what you do. The question is, how long will it take to infect everybody? If you're not resistant, if you're not immune, you will get the virus. There are not enough protocols in place to stop everybody from getting it. The only thing we could do is have a vaccine. All right, and I talked about that a couple of weeks ago too. I talked about how it's all going to break down anyway, because the kids, like my daughter who is driving with her friend to see me, and only because we had a conversation in which I said, I'm not going to see you if you're coming from an airport. I said, Jackie, it's great you can come down. You want to fly down here with your friend. I said, you can come fly down here with your friend, but you're not staying in my freaking house. And she's still not staying in my house. I put her in a hotel. But I said, you're not staying in my house. I said, what are you, crazy? I said, I don't have any way to test you. And even if you had a test, it wouldn't tell me for sure that you're a thing. I said, I'm thinking locked up for 3 months. And now I'm going to let you come in with whatever the frick you passed in an airport. I'm like, no, that's not how it works. It's ridiculous. So they decided to drive them, which is, what are you gonna, they drive together anyway and go places anyway. So what's the difference, right? It doesn't increase her net exposure, so I'm fine with that. And I'm still going to maintain a bit of distance from her. We're going to go outside. We're going to sit outside in our town or whatever. But I'll do that because limited enough, but if she went through an airport, I'd be like, no freaking way. But people are doing it though. It's already happening. People are on planes that are super crowded. And it only takes one of those people to have the virus to start reinfecting everyone again. And you're back to square one. So what's our bet that that's not happening? Right? You may as well buy lottery tickets if that's how you're going to make your investing premises. So that being the case, I mean, I did the math and I said, hey, here's your optimistic, this is the optimistic outlook. If Trump is right and it's not that infectious, and 95% of the people who not 95% who are exposed, 95% of the people, well, 95% of people have mild cases or no cases, like they say now, like they're saying in New York, it looks like probably 80–90% of the people who get infected don't even know they're infected. They don't even know they have the virus. They have the antibodies. It means that the virus hit them at some point, went away, and that's that. They could still be carriers, but it didn't affect them in any way that bothered them. So if we assume 95% of the people are mild cases that never require hospitalization, that still leaves out of 330 million people, 16.5 million severe cases in America. We have so far 1.8 million. 5% of 16 million. So far, we've identified 1.8 million people. Now, why is that? Most people haven't been infected yet. Most people we locked down, and most people stayed away from other people, and most people haven't been infected yet. In New York, they're finding 20% of the people have been infected. 80% have not, even in New York City. 80% of the people have not crossed paths with the virus yet. But when you do, you will find out if you are severely affected or not, but that's the only time you're going to find out. So nationally, it's very unlikely we're at 80% infection. Nationally, we're probably 10% of the people maybe nationally are infected or have had contact with the virus. So of the nationally 33 million people who have been in contact with the virus, 1.8 million, so 5% of the people, which is the number I'm using here, 5% of the people who have been infected by all the math that we understand so far have been affected badly enough that they have gone to a doctor, gotten the test, been hospitalized, whatever. Right? Because that's our count. The only people we've been testing, the people who were really sick, and we said, oh, what's wrong with you? Oh, it's COVID-19. That's how we find out people are sick. The only testing we've done so far has been of sick people. So the number we do know, how many people are sick. What we don't know, how many people were exposed. But now we have some spot studies in New York and California and a couple other places. And baseball just tested. It turns out only 2% of the baseball players were exposed. And that was, by the way, on Fox. They're making a big deal about that only 2% of the Major League Baseball players, they tested all Major League Baseball players, only 2% were infected. And they're like, ha, see? And it's like, that's really stupid. Every single baseball player, the minimum salary of a baseball player is $250,000. They all live in nice apartments, okay? They all were able to shelter in place and order takeout and do all the right things right away. They didn't have exceptions for their family. And by the way, that's true. You may be rich, but your whole family isn't rich. And unless you're blockading them and keeping them away from you and everything, you still risk exposure. Because if they, like, my friend's grandmother was going, she's at home, and they take the bus to the grocery store. And I'm like, well, what is the point of being locked down if you take the bus to the grocery store? Because everyone in the home is locked down. Then you leave the home with a bunch of people from the home, get on a bus with a bunch of other random people, go to the grocery store, more people, and then bring that crap back to the home. This is the problem in America. We aren't doing a proper lockdown. You know why we're not doing a proper lockdown? Because the government doesn't give you proper guidelines for how to lock down or what to do. What's the point of having a half-assed lockdown? I don't understand what we're doing. But anyway, so given those numbers, like I said, so probably less is affected in the population. But so I'm assuming these are all positive assumptions, or as positive as to mild outcomes. So these are Trump's assumptions, that 16.5 million people will be severe. Only 20% of the severe cases will require hospitalization. That's still 3.3 million people. And only 25% of those 3.3 million people die. That's 825,000 people. That is the government projection. That's what they're looking at. That's their optimistic projection ending the lockdown. Now, so far, only 100,000 people, only 80,000 people are dead, which makes sense because 10% of the population has been infected, 80,000 people are dead. Infect 100% of the population, 800,000 would be dead. That's pretty simple math. It all adds up. Every single thing cross-checks with everything we know. That's our best case scenario. But you know what? Economically, there's nothing wrong with that. Ignoring the fact that 800,000 people are dead, not a big deal to the economy. 3 million something people die every year. That's normal. So what's 800,000 more? It's just a blip. It's not going to destroy the economy. That's not going to destroy the economy. And that's the logic that they're using. But their logic is based on a possibly faulty assumption that only this many people. If any one of these percentages changes in a bad way, it skews everything up violently to much larger numbers. You can get to, it takes nothing. If you change that 95 to 90%, this doubles to 1.6 million. Just by changing this to 90% from 95. That's a 5% error in the calculation. Okay, changing 20% severe cases to 22% severe cases would take you up from 3.3 million to 4 million. And then if more people die, and again, then you could easily go from 800,000 to 2 or 3 million, very easily, just by a couple of teeny tiny less than 10% adjustments, and you're suddenly going from 800,000 to 3-4 million. If they all go the bad way, that's, again, maybe that won't happen, but that's the point. You can't base your premise on positive assumptions. Now, again, 3 million people die in a regular year. If 6 million people die next year, that's still not horrifying. I mean, as far as economically, obviously, human-wise, horrifying. So, what are we willing to accept? And that's where you are. I mean, basically, you know, Trump has decided he's willing to accept huge amounts of losses. He's convinced himself, and you know, he lies to himself too. He doesn't just lie to us, he lies to himself. He's got his narrative going now, and he thinks he's a wartime president, and that we're all soldiers. That's how he's justifying this in his mind. You know, and again, that's what he's saying to us to justify it. Maybe in his mind, he's like, I don't give a shit how many of those rat bastards die. You know, who knows what he's thinking inside. But what he's telling us is horrible enough. He's telling us that we are warriors, that we are in a war against a virus, and that he is going to send us out, and some of us won't come home. Some of you won't come home, but it's for the greater good of the US economy. And that's where we are. So when you ask me where the bottom is, I guess that was a long way to answer that question. When you say where's the bottom, I don't know. Because these numbers, which we don't know anything about yet, could go either way. They can't go either way. I'm sorry. These are the most favorable numbers that we have right now, putting a bright light on every single calculation to get to Trump's numbers. And Fauci just said yesterday, that's way too optimistic. And then the most dangerous thing of all, the number one thing we can control is this. Because once you go over the healthcare system's capacity, people die for all sorts of reasons. And by the way, people are going to die for all sorts of reasons, like an uptick in other things that should have been taken care of that aren't. How many people right now who would have gone to the doctor because of their heart palpitation, or they have a lump somewhere, or there's a skin thing, or whatever. Something could be cancer, something could be this, something could be that, diabetes onset. All these things that people would ordinarily have gone to see a doctor for in the last 3 months, they're not going to doctors for that. Nobody's going to get operations if they can avoid it, so on and so forth. The longer you drag that out, the more very unpleasant outcomes you have from all sorts of things down the line. So another 1 million+ people who could have been saved by just basically following normal medical routines are not going to be saved. So that won't get counted as a virus death. That's just gonna be, oh, tough luck, you had a heart attack, but shouldn't have the heart attack if you've been able to go to a doctor and get checked out. And not that you can't go to a doctor, but like really, how many of you guys want to go to a doctor right now, right? What has to be wrong with you? What's her name? Robin on the Howard Stern show on the weekend. Well, I don't know when she said it. I was listening on the weekend, and she may have broken her foot or fractured her foot. Something happened. She tripped and her foot was badly sprained, fractured, broken, something. And she's like, I'm not going to a freaking doctor. She's like, she was a nurse too. She's like, I don't know what's wrong. She goes, I'm just staying off it, elevating. I'm doing everything I should do if it was broken. And I don't know if it's broken, and I'm not going to find out because I'm not going anywhere near a hospital. And that's crazy, but that's how it is for most people I talk to. Nobody's going to a doctor. There's sick people there. That's like during flu season. I never go to a doctor during flu season. That's the worst place. Ever since my kids got out of daycare, I've been like, okay, so I'm going to go to a doctor's office. I used to go, oh God, I used to go when the kids got sick. Oh my God. You sit there with the freaking kids, they all have colds, and it's like So anyway, so it's about so flattening the curve again. Same amount of people affected. It just depends on over what period of time. And if it's over a longer period of time, then these people cycle out of their hospital beds. The beds free up. You can get the next batch in, and the next batch in, and the next batch in. If everyone gets sick at once by reopening, because we are right about here on the curve, and we have flattened it, and we're hopefully skimming along the top. And I said the other day, I said a lot of parts of the country, though, they're way down here. A lot of parts of the country are way down here. They're nowhere near their capacity for medical. So in some parts of the country, you actually do want people to get sick. You don't want to drag it out too long, because it's just going to be this constant annoyance, right, of the economy and everybody having to be careful. The faster you can get everyone through the cycle, the better. So you want to stay near the top of the curve. That's not reflected in these charts. You want to stay near the top of the curve so you get as many people done as possible, as fast as possible, and then hopefully have a quicker drop-off. And then that shortens the overall time of the problem, and then everybody gets back to normal. We're not anywhere close to that yet, though. We're only here. We're only at the part where we had to shut down before we went over the curve. But we're a lot of places like New York and Los Angeles and stuff, we're hitting the top of this range. Any more people get sick, and this thing's going to blow out. And then it's a catastrophe. And that's how you get to 4 million dead people. You just completely overwhelm the healthcare system, and then you overwhelm the healthcare system, and then the doctors start dropping like flies. You're already hearing that in New York, that X many doctors and X many nurses and so on and so forth. So in addition to overwhelming the healthcare system, you start losing the doctors and nurses who are supposed to be running the healthcare system. That lowers the capacity, and then this line starts going down where you have less capacity to take care of people. So where's the bottom? There's no bottom. I mean, well, yeah, there's a bottom. The bottom is where's my thing? I lost my chart now. Hello, chart. Nope. Wow. There it is. So where's the bottom? The bottom is still down here. But probably, hopefully not. I mean, this is inept, incompetence, bad judgment. We reopen and everything goes much worse. We're starting at a base now. Oh, here. Oof, depressing. All right. So this is 429. Oh, it's 2 weeks ago. We did a seminar. I don't know what happened last week. All right. So 2 weeks ago, globally, no, that can't be right. Wow. I had no idea. We have 1 million more global cases than we had last 2 weeks ago. Holy crap. 30% more. US has, we went from 1 million basically to 1.38 million. So let's say 35%. We jumped 35%. But the whole world is basically running at that rate. In 2 weeks. How does any country tell you they have this thing under control? All right. I mean, think about what we're investing in. Look at this chart. This isn't flattening out. That's the world, I guess. So that's the global chart. Ooh, Russia really came in, huh? Yeah, look at Russia moving up the charts. 100,000, and now they're at 240,000 in 2 weeks. But that's what I was saying. So my point is that in the US, hopefully this thing will change. There it goes. Okay. Look, our curve is steeper than the rest of the world's curve. In the US, 2 months ago, no, not 2 months ago, 2 weeks ago, sorry, 429. 429, 1 million. Now we have 1.379. That is 35% more cases in 2 weeks. I don't care how you want to slice that. That's not good. How do you pretend that's good? How do you get on TV and claim that that's getting better? It's nowhere near better. But let's keep in mind that when we did the lockdown, March 15th, yeah, because my birthday was March 29th, and we had been quarantined for 2 weeks on my when I had my birthday. Remember that? So my birthday was March 29th, 140,000. March 15th, about, we had quarantined, and we had 320. We had 2,900 on March 15th, and we had 40,000 on March 29th in 2 weeks. So that was 35,000 more cases, starting with 30,000. No, wait, what am I saying? I can't get this right. 15th. Sorry, starting with 3,000. We went in quarantine. We already locked down. So starting with 3,000, we went from 3,000 to 140,000. Wow, that was a bad day. We had 20,000 jump the next day. So 140,000. So from 3,000 to 140,000. That's getting close to 50 times in 2 weeks. Now, that wasn't caused by being locked down. That was caused by it was too late already, and you detected these cases after being let out. Nobody knew they were sick. On March 1st, when Trump was saying we hardly had any cases in America, we had 30 cases. 30 cases, 3,000 cases 2 weeks later, 140,000 cases 2 weeks after that. So now we're going to experiment by going back to this situation, by being open on, but we're starting with this many cases. So all this explosive growth, 50 times more infections, is what can come from releasing all these people back into the wild. And then not those people, but you don't know if you're infected. That's the problem. That's what the lockdown's for. It's a very long cycle on the virus. You don't know when you're contagious. You don't know when you're not contagious. And the only thing you can really do is keep people in homes so long that there's hardly any cases. Like China has 10 more cases in Wuhan. They completely freaked out and started retesting the entire population. And they're going to track everyone down and make sure every single case is identified. But they're treating that like 10 cases as a crisis to lock it down. We had, I wish I could make this bigger. Or maybe I can. Ho-ho. We had 1348 yesterday. We have 137 today. So that's another 22,000 cases in a day. Brand new cases. So again, we started in March. Where are we? We started March, 30 people. And 2 weeks later, when we decided to lock down finally, it was at 3,000. 100 times more. That's in 2 weeks. Then 2 weeks later, even though we had the lockdown, it was already too late because it was spreading. It had already spread. March 31st, 188,000. And since then, we've been on the same growth path with almost no variation in lockdown. But the key thing here is 22,000 in a day. And now so that means 22,000 people we didn't know were sick yesterday are sick today. If we end the lockdown today, there's still going to be 22,000 new sick people tomorrow, except the difference is they'll be out and about like these 30 people were. Except it's not 30 people, it's 22,000. And there's another 22,000 behind them, and another 22,000 behind them, and another 22,000 behind them. So instead of 30 people, you're sending 300,000 people out over the next 2 weeks who are going to be new virus cases who are going to mingle into the population the same way these 30 people did. And if they cause this much damage, then the entire country is infected. And it doesn't matter what you do. And this is why those virus maps, that's why the area of the virus map stays the same. It doesn't matter what you do, you'll get infected unless you go live in a bubble, like one of those bubble people who, like with a completely no contact with the outside world, whatever. But I mean, look, already my town started opening up, right? I was talking about that in chat. In fact, where was that? See, everything happens in chat. I always go to chat and say, here's what's going on. All right. There was an earlier picture, too many pictures. Oh, okay. That's what my town is. This is not actually my town. This is what my town looks like, though. This is what my town looks like. All the restaurants have put tables outside, spaced apart. The waiters come out in mass, and they serve you. This is a very flawed concept, though. First of all, she doesn't have gloves on. Very typical what I see. None of the customers have gloves on, have masks on, or gloves, obviously. She's picking up all the stuff you touched, the fork you put your mouth into, all the stuff you breathed all over. She's wiping the table down with her hand. She's carrying the tray with her hand after she wipes the table down. She touches her mask at some point, and nobody wears that thing all day without touching it. She goes back and she goes to the kitchen where she places an order on a piece of paper that she hands to the chef. And then the chef takes the piece of paper that she was touching and he touches your food. And maybe he's got a glove on or whatever, but you know what? It doesn't matter because he touched the paper with glove. You think he takes his glove off and puts on a new glove to touch her paper and blah blah? It's bullshit. So here you go. So even if I don't eat in the restaurant, I'm getting takeout from that restaurant. So all of a sudden, my exposure, which was limited to the staff of the restaurant and nobody else, now the restaurant has 100 or so people coming in and possibly infecting the staff every day. And there's no way, obviously, you will know about it until it's way too late. And this is why, unless you have a real proper lockdown with very strict rules, everybody will eventually be affected. You can't avoid it. There's too many freaking people, potential points of infection for it to not slip by. It's not preventable. And it's the same thing. It's the same thing as trying not to get a cold. I'm sure some of you guys will tell me anecdotally, I didn't get a cold for 2 years or 3 years, or I never get a cold. Fine, then you're lucky. There's going to be people in any kind of pandemic. You're going to have a certain amount of people who are, hopefully anyway, otherwise your species dies, but you're going to have a certain amount of people who are immune for whatever reason. And whether that's 10% or 20% or 30% or 90%, it doesn't matter. It's what it is. But that doesn't mean that the people who are going to get infected are going to get infected. You can't stop it. It's actually worse for the 10% when 90% of people aren't affected, which is kind of like what's with Corona, is most people get very mild cases and don't care. So therefore, they just go around and spread the disease to everybody else. That makes it worse for the people who are susceptible. Because this is what's happening to me already. And I predicted this 2 weeks ago. It's what I wrote about when I wrote about the fuck it thing. This is what's happening now already. And it's going to get worse and worse. And there's going to be less and less potential places where I could go to stay safe. And I don't mean go out to eat. Like I said, if I order from this restaurant now, it is 90% less safe than it was last week. And as restaurants open more and more up, how many people are going to cater to me? Who's worried about it? How many places are going to keep a totally clean, safe environment to protect me? They're not. Economically, it's not worth it for them. They're not going to do it. So it's honestly, it's not worth really. It's not worth all the effort I'm putting to avoid getting the virus. But on the other hand, kind of hope there'll be a vaccine at some point. It's just so hard to knowingly take your chances on something like this, but you're not going to have a choice. You're just not going to be able to go far enough away from all the people who are going to start reintegrating. So at this point, all we can do is cross our fingers and pray that Trump is correct. Because if he's not correct, we are very, very screwed. But still, regardless, we can't play our portfolios that way. We have to play our portfolios that we don't know what's going to happen. We're going to be careful. We're going to lock it down, and we're going to have a lot of hedging. So I wish I had better news. Like I said, I feel like I'm on the Titanic yelling iceberg, and the band just keeps on playing. Everybody dances away. I'm like, that's an iceberg over there. Don't worry, we probably won't hit it, blah, blah, blah. I'm sure the captain knows what he's doing. Don't be such a warrior. Somebody made a really good point. It was one of the comedians there. They made a good point though. They said if Trump were the captain of the Titanic, he would say, why is everybody blaming me for the iceberg? What about these life rafts? Look how popular they are. And it's a good analogy. It really is. It's like, yeah, okay, you drove the ship into an iceberg, you wrecked the boat, everybody's gonna die, except for like some people who get to the inadequate amount of lifeboats. But you point to that and say, see the lifeboats. It's me. Thank me. I hate lifeboats. It's insane. It really is. So anyway, so we're gonna go over the portfolios. Next 2 days, we're gonna write everything up. It's unfortunately we lost 500 points already. Take a quick look just to finish things up here. short-term, let's see, 471. See if we do any better. That's 479. Look at that, 8% more in the short-term portfolio. Yay. You see, if you can gain 8% every couple of hours, you're going to be in good shape, right? I mean, it's fine. Long-term portfolio, let's see how much we lost in the long-term portfolio. I forgot where we were. We were like 45, right? Nope, same. Yeah, great. So we actually gained ground. That's nice. Butterfly portfolio does not reflect the changes from yesterday. We already did the review on the butterfly portfolio. And for some reason, it's being slow to resolve itself. Wow, Germany closed 2.5% down, France 2.5% down. Ugly. Oh, why does some of them take so long? So weird. This is still the LTP. We also got to look at these inside, like, are we sure we're going to keep them? We already did this, but every week I got to do it again. I mean, every week, every month, I got to do it again. I got to say, is Plains really going to be okay? Certainly not so far. Broadcom, Berkshire, we just picked up. Oh, here's the butterfly. 111, they took about a 10% hit in the butterfly portfolio, but we did make changes, so hopefully they worked out. Dividend is going to be a disaster again because of the drop. 31% down in the dividend portfolio. Earnings portfolio. We should have made the same corrections in the earnings portfolio. We're going to have to look at that in the SQQ. We're going to have to do this pretty quickly. But it's just, oh, you know what? We had a little bit more aggressive hedging here. That's good. But we have SDS and we have SQQ and you know what? Look, see how we actually made money though. We're actually up a little bit on this because why is that? I guess if we had left we took off this SDS in the short-term portfolio. We left it on here. We're back to being profitable here. So if we had left it on for a couple of days, we would have made money. Futures now. Oh, still doing well, 23%. Very nice. But every time you gotta look at it, is plug power still a thing? Is Square still a thing? Is Total still a thing? Beyond Meat, are they too toppy? That's where all our money is. If it wasn't for Beyond, we'd be in big trouble. SunPower, I don't know. I like all these positions. It's hard to change them. Hemboka portfolio, I don't really know what the point of this thing is anymore. It's down 8.2%. I think we should kill it and make room for a new one. And that's it. And then the money talk portfolio. Oh, minus 3.6%. So that's down about 10% too. So in general, we lost about 10%. We're losing about double the speed of the Dow, of the market. So and of course, obviously, all these portfolios rely on the same kind of hedges the short-term portfolio has, just in smaller proportions. So, there should be a hedging portfolio for any of these portfolios that's making money, except for the earnings portfolio, which is self-contained. So nothing to worry about, but again, why lose, just because you can hedge and stay even, why do that though? Why not make money on the hedges at a certain point? So we are legging further down if things are turning ugly. If, my impression was that the reopening would go badly and that we'd suddenly have to shut things back down. So the question is, how fast is that going to happen? And and you see Los Angeles talking about 3 more months of lockdowns, and Cuomo's talking about New York City staying locked down for another couple of months, except for very strict exceptions. And those guys are science guys, not that they're scientists, but they're guys who listen to the scientists and get the best, smartest guys on it. And they're telling the same thing Fauci's telling Trump, except these guys are listening. And they're doing the right thing probably, and that means the rest of the country is doing the wrong thing. The wrong thing could be a disaster, but unfortunately for New York and Los Angeles and cities like that, it doesn't matter if you do the right thing, because if everybody else is out there having a party, you're going to be surrounded by, it's like a zombie apocalypse movie. You're surrounded by infected people, and you can't fight them off forever. You will just end up succumbing at some point. So, eventually everyone will get sick, and some of us are going to die, and good luck to everybody. That's my optimistic outlook. But meanwhile, the economically, and look, personally too, look, you have a chance of dying every day. If you're 60, if you're 50 years old and more, there's a lot of things that can kill you. And my attitude is I was only gonna live 30 more years anyway. I wasn't really gonna enjoy the last 10 of them. It's not it doesn't suit me. The sedentary, decaying lifestyle, deteriorating lifestyle doesn't suit me that much. So I wouldn't be a happy old person. I'm not gonna be like thrilled that I can't go places and do things and get out and whatever. That would just annoy me on a regular basis. But I'm annoyed now. I've been in for 2 months. I want to shoot somebody. So I figure I got 20 good years left at least. And but after that, I'm not counting on it anyway. So so in that case, at some point in 20 years, I could very easily die. And that means that any given year, I got a 5% chance of dying. So this virus is a 1% chance of dying. So it raises my chances by 1%, basically. Right? That's all it does. It's not a big deal. If I get, if we get the virus, obviously, physically, so on and so forth, I think probably I'm a little more susceptible. But either way, it's not that much worse than my regular chances of dying if any given thing. Because I've seen friends of mine get cancer all of a sudden, and people have heart attacks all of a sudden. People you think are perfectly healthy all of a sudden drop dead. It happens. So this is just something that you know about, which you know about cancer. I know about skin cancer. I still go to the beach. I certainly know about like weight issues, and I still eat because I freaking love that. Basically, it's like my favorite thing about life is going to restaurants and having great meals and stuff. So I'm not sure. It's very hard for me to stop doing that. And I would exercise more, except they close my freaking pool. So that's annoying. And the beach is closed, so I can't swim at all. And walking is not as good as walking. I've been bike riding. I've been good about my bike. I've been getting out there. Anyway, so I think it's my attitude about it is it's worse, but I'm a statistics guy, and it's not that much worse than anything else that could kill me. But most things that can kill me, I don't foolishly run into. I don't stay in the sun too long. If I had something like a mole or whatever, or some skin thing, I would get it checked from the doctor. I would not get it checked. I don't smoke. I don't do things that would cause cancer purposely. I do what I can to stay alive for the most part, and this makes it a little bit harder. But it's not something I'm going to change my life over. Basically, not to a ridiculous extent, but you have to be, at a certain point, you got to accept the fact we're going to get the virus. It's just hopefully we get it later than sooner, and they have a better idea of what to do and how to treat you and how to help you when you get it. But the same amount of people, we're all going to get it. That's the thing. We're all going to be exposed to it, and some of us won't have reactions, some will. And there's not a lot you can do about it. I'm certainly not advocating just saying fuck it and going out and running out if you feel you're in a risky situation, which I am a risky situation. I'm a 57-year-old overweight guy. So I have a higher risk than other people of getting very sick from this thing. And, all I can do is stay home, eat healthy, avoid contact, but eventually still going to get exposed. The way they're lifting these restrictions and putting people back out there, going to get exposed. Can't help it. My mom, 80 years old, going to get exposed at some point. And I just hope she's okay, and I hope I'm okay, and I hope my family's okay. Somebody won't be okay, though, statistically. Somebody I know won't be. But what are you going to do? But economically, this is not likely to be a long-term, permanently damaging thing. It's going to be catastrophic, as the same way 2008 and 9 were catastrophic, but we survived that, and we're going to survive this. But let's be smart about it. Let's not needlessly take chances and throw. Now we're down 600 points. Let's not needlessly take chances with our money. If we don't know which way the market's going to go, if it's not able to hold itself up at this level, and this level keeps dropping, but we're now 2,800 on the S&P, and I said 2,850 has to hold, 2,800 is barely holding. So if we're going to slip below 2,800, we have to first add more hedges. But after at a certain point, the hedges aren't going to help. And where's my thing now? And you've got to watch these lines. That's what these lines are for. 2850, 27 really is the bottom. We go below 2,700, that's when the portfolio is going to be in danger of slipping below $1 million. And that's still up tremendously for the year. We started with 600,000, so it's still up great for the year, but it's not up to 100%. We will have blown $200,000 of our gains. Of our $600,000 gains, we'll have given up $200,000 if we get back to $1 million on our portfolio. I don't want to go any lower than that. When you're at $1 million, to get back to 1.2 million is very easy. But if you let it go to 800,000 and you want to get back to 1.2 million, you need a 50% gain. That's a fantastic year. We just had that kind of year, but that's only because we were lucky and we called it right and the market made a tremendous move. You can't count on that always happening. It could be flat for 2 years after this. Now we can make money in flat markets, but you've got to adjust and adapt and so on and so forth. And it would be a different kind of portfolio than we're doing right now. We have an aggressively bullish portfolio, generally. We have some heavy hedges too, but generally our portfolios are pretty aggressive because we went in heavy down at the bottom here. And that's fine as long as we're back up here. But when we start slipping into here, a lot of these positions aren't going to be very pretty. And if we stay down here, they're not going to get fixable. So the must-hold line, what is a must-hold line? The must-hold line is the line we must hold in order to stay bullish. That's what it's called, the must-hold line. If we can't hold the must-hold line, and again, it's the same rule below as it is above, 2 days below without going over. So if Friday, we're still below the must-hold line and we didn't go back over, we have to make some bearish assumptions into the weekend, and we're going to have to be pretty drastic about our cuts. We're going to have to be very aggressive with our hedges. And if we're wrong, we're wrong. But the point is, if I make those mistakes when we still have $1.1 million and I lose $100,000 because I was wrong and the market goes up instead of down, that's going to be really easy to fix because our longs will be in good shape and we'll just have to remove some of the hedges. But if we're too bullish and it goes down, that's much harder to fix. So we'll see what happens tomorrow, and we'll see what happens Friday. But so far, this is not a very well-behaved market. All right, so everybody has to be very careful, and just tune into the chat room. We'll figure out what we're going to do with the portfolios. All right, let's see if there are any more questions before I finish. Nope, that's it. Nobody had any extra questions. Fantastic. Thanks everybody for coming. I appreciate it, and we will do it again next week, assuming we all survive. That's terrible. All right, sorry. Take care.